What's up, Money Minds? Welcome back to Market Briefs Video Edition. Today is October 19th, and here's some business and financial news you can finally use. Today's the big day. The Bitcoin ETF is making its debut, and it's also National New Friends Day. Maybe you can celebrate both by bonding with your new friends and talking all about Bitcoin on our Guac Talk community Discord. We started our Guac Talk community Discord just a few months ago, and it already has over 15,000 Money Mind members. If you want to join our free community Discord and talk all things stock, investing, wealth, and of course guac, I'll leave a link to how you can do that in the description below. In our October 18th market recap, besides the Dow, the index has jumped in a positive territory, shaking off the weak economic data coming out of China. Consumer and tech stocks were one of the hottest sectors yesterday, and the S&P 500 and NASDAQ saw their fourth straight day of gains as investors wait out another key week of earnings. Today specifically, Johnson & Johnson reports its earnings. In our financial tip of the day, it's time to check yourself. There are two types of credit checks, a hard check and a soft check. Too many hard checks at once can hurt your overall FICO credit score, which will end up giving you a red flag to potential lenders. So if you want to learn how to not set up those red flags to investors and check your credit score the right way, our team wrote an article on this exact topic over on theminoritymindset.com, and I'll link it for you in the description below. In our first main story of the day today, let's talk all about the economy. But first, my name is Nate from Minority Mindset News, and if you like this video, smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. A lot has changed over the last year and a half, but the vicious supply chain cycle that's plagued global economies is still here to stay. And you might be wondering, what exactly is that cycle? Well, stores are short of product, so they need more deliveries, but the industry is short of truck drivers. Even if they hire more drivers, there is a shortage of trucks. Even if they create more trucks, there is a shortage of chips for the trucks. Do you see the pattern here? And you're probably wondering, how does this affect me? Well, besides the frustration of stores still struggling to keep shelves stocked, the shortages have put a boost in prices across multiple sectors. Americans will spend around 54% more for propane, 43% more for heating oil, 30% more on natural gas, and 6% more on electric heating this winter. The U.S. Consumer Price Index soared around 5.4% last month, with meat alone rising by nearly 13% this year. Apparel, transportation, and shelter have all risen by over 3% this year as well. In our second main story of the day today, let's talk about what we love: wealth. The wealthiest top percent of Americans set a new record by owning an overwhelming majority of U.S. stocks while profiting the most during the pandemic. For instance, the top 10% of Americans, of course, now owns around 89% of all U.S. stocks. Between January 2020 and June of 2021, the top 10% saw their stock's value increase by 43%. On the flip side, the top 1% during the pandemic gained around $6.5 trillion in corporate equities and from mutual funds. The top 1% now owns a record 32% of all stocks, and nearly 70% of that growth came in the last 2 years. And then there's everyone else. The bottom 90% only gained around $1.2 trillion during the pandemic. Only 11% of those stocks are owned by the bottom 90%, down from 12% during pre-pandemic times. And for your beginner investors, millions of new investors joined the stock market world in 2020 to try and make a little extra money. Robinhood, for instance, added over 10 million accounts in less than 2 years, most of them being young, first-time investors. That is it for our main two stories of the day today. So let's take a quick break to talk about today's sponsor, M1 Finance. With M1 Finance, you can finally invest on your terms. And it's easy as 1, pick your pie. That tells M1 Finance how you want your money to be invested. Number 2, set up automatic deposits, so a percentage of your paycheck is automatically invested. And number 3, just sit back and let the market do its thing. Of course, without worrying about commissions. What's even better is if you can't afford to invest in your favorite companies like Amazon or Apple, that's no problem with M1 Finance. The company lets you invest in fractional shares so you can buy half a share or even just a portion of a share. If you're interested in learning exactly how M1 Finance works and want to start investing with them, I'll leave a link in the description below on exactly how you can do that. In our next main story, housing confidence is rising. Despite some supply chain issues, builder confidence actually bounced back in October. Home builder sentiment jumped around 4 points on the National Association of Home Builders Market Index, the NAHB. Simply put, though, it's an index that measures home builders' confidence in the market. Supply chain issues and labor shortages hindered the housing market for most of the summer. Without building materials and workers, it's pretty hard to actually build a house. But home builders are seeing a high buyer demand that is making up for the supply chain issues. Now, to be clear, though, these issues are not gone by any means, but the pent-up demand is what made the NAHB rise by 4 points in October. Other concerns, though, are affordability. As builders raise prices to meet the rising costs of labor and materials, housing prices are going to go up. The average price of a newly built home in August was 20% higher than the year before, but the bottom line is this. For buyers, uncertainty in the housing market makes it a pretty scary time to build a house, at least price-wise. But builders are encouraged by the overall demand. In our mind blown section, let's take a skip across the pond. Ford plans to spend $315 million to transform an old factory in England into a new plant for electric vehicles, along with some UK government support of over $30 million. This will be Ford's first electric vehicle manufacturing plant in Europe, and at least 500 jobs at the factory will be saved just for it. Ford says by 2024, the plant will be pushing out electric vehicles and plans to create 250,000 of them at each plant each year. So why exactly are they choosing Europe? Well, just last year, the UK government made a $500 million pot to entice electric vehicle makers to move operations to the UK, since they have been pushing to cut all petrol and diesel cars by 2030. Europe is in desperate need of some electric vehicle manufacturers in order to reach their goal. Next, let's pick your brain and talk about something that is literally right around the corner. The holidays are coming up, which means Amazon is about to be slammed with extra work. The retail giant plans to hire around 150,000 new seasonal employees for the upcoming months. Next up is our Money Mind section, where we pull comments directly from you all on our YouTube, Instagram, and TikTok accounts. Today's comment is from C-Pains on our YouTube channel, and the comment reads, "I love the way this guy teaches. The things he teaches should be taught in school." And we pretty much agree. Financial education, unfortunately, is pretty skimmed over in school. And financial education used to not be accessible to everyone. But that's where the money nerds come in. Our mission is to give everyone the same opportunity to educate themselves about finances on all of our free platforms. So if you want to check out all of the places where we teach financial education and give you some breaking news every single day, I'll leave a link in the description below to our other YouTube accounts, Instagram, and TikTok. In our Mind Break section, let's talk about Apple's main event. Apple dropped its second major product event of the season. The all-virtual event revealed some old and new products just in time for the holiday shopping season. Apple ended up showing off 2 high-end MacBook laptops that use next-generation silicon chips. The top-selling MacBook is finally getting its first major update in around 5 years. Airpods are also getting an update for the first time in around 2 years. Since their 2016 debut, Airpods have become a premier earbud on the growing market. Honestly, if you don't use Airpods, are you even cool? They also had some surprises though. Apple Music Voice was announced, which is basically Apple Music but controlled by your best friend Siri. Siri will suggest songs based on your mood and activities. Both Amazon and Spotify have similar services. Money Minds, we are nearing the end of today's Market Briefs newsletter, but here's just a few more things to keep in mind. Squid Game is now worth around $900 million. The new South Korean Netflix series is the company's biggest launch ever with 111 million global viewers. Another thing to keep in mind this week is that Walmart is allowing all of its Walmart Plus subscribers to begin shopping 4 hours earlier on Black Friday than all of its other customers. In addition, in a fight against rising natural gas prices, U.S. companies have started burning coal again. Coal-fired power is expected to climb 22% before the end of this year. And one last thing to keep in mind this week is that Netflix had to fire an employee that shared confidential information about Dave Chappelle's new stand-up special, The Closer, to Bloomberg. But that is it for today's business and financial news. Thank you so much for watching. If you like this video, don't forget to hit that subscribe button below. Keep hustling, Money Minds, and I'll see you all in the next one.